Hello everyone and welcome back to the channel. Today I show you the latest changes in my stocks portfolio and I will go over some exciting movements and interesting news regarding my stocks. We have Novo Nordisk on the rise again. My position went from minus 30% in the red to finally back in the green. This was a huge swing for the stock in just less than a month. I'm going to see what news caused Novo Nordisk to fall and what news caused the stock to rise again. I'm also going to take a look at Josh Tarasoff's recent trades. He's one of the super investors that I really like and follow. He's invested heavily into Brookfield, and in the last quarter, he sold 100% of his Brookfield Corporation shares and bought Brookfield Asset Management instead. I want to speculate on the reasons and tell you what I'm going to do with my Brookfield Corporation shares before the stock split. And finally, we have some major big news from Meta. Meta is going to invest $10 billion in Google Cloud instead of AWS or Microsoft Azure to expand their AI infrastructure. I own both Meta and Google, and we will see how this can impact the cloud competition landscape. This news, together with the market rally, caused Google stock to hit a new all-time high share price on Friday, and yes, it finally became the largest position in our stocks portfolio. We have a lot to cover today, so let's get straight into this. Let me start with the portfolio overview. I personally have almost $124,000 in Wealthsimple, which is up 60% or $47,000. I also have a small $15,000 in National Bank direct brokerage account, and we have close to $47,000 in this smaller separate Wealthsimple portfolio, which has shown an impressive 300% plus return. As our wealth is combined, we manage all of our assets as a single combined portfolio, which I track them here. We are up 79% or $82,000 from where we started investing in these portfolios, which is almost 3.5 years ago. I track the combined portfolio here in this new website project that I'm working on for a couple of months now. Pretty much everything is automated in this new software, and I added new features and insights which makes tracking of positions so much easier. Let's look at the overall portfolio allocation. This is a nice graphical representation of the stocks we hold in our combined portfolio. This is an overall concentrated portfolio with only 11 different companies. The largest holdings in this portfolio are these three companies, my winner's triangle. Google with 15% weighting, and then Meta and Brookfield with 14% weightings, followed by EQbank with 11% weighting, Constellation Software with 10% weighting, then Alimentation Couche-Tard with 8% weighting, Louis Vuitton and Novo Nordisk with 7%, Amazon with 6% weighting, Intact Financial with 5%, and finally Aritzia with 3% weighting. The portfolio is pretty concentrated, as you can see, which shows how much I believe in these companies. Next, the software will show me the geographical allocation. As you can see, 51% of our assets are in Canadian companies, 35% are in US companies, and 14% are in European companies. No exposure to China or other markets at the moment. We almost have equal weighting in terms of US dollar and Canadian dollar in these investments as well. In terms of sector allocation, tech stocks are 45% of the portfolio, which may be a little bit too much, but most of that came from capital gain from tech stocks. And we then have financials at 29%, then we have consumer staples, consumer discretionary, and healthcare stocks. So relatively nice diversification in terms of the other sectors. Finally, we can look at the best and worst performers in the portfolio here. According to the software, Meta is my top performing stock, which is up 398%, almost 400% return or 25,000 Canadian dollar gains. Followed by Aritzia with 108% return, Amazon with 78%, Brookfield Corporation with 75%, and Google with 65% return. And finally, we have EQbank with 58%. These are amazing performances by my top 6 stocks. In terms of the worst performers, we still have Louis Vuitton here, which is definitely the worst performing stock of the portfolio with minus 11%, but it is slowly closing the gap. To see what is going on recently with my stocks, I can click on momentum analysis using intelligent query here. The software will gather my portfolio data and then write an intelligent query to Google Gemini Pro using a technique called grounding, which gather more data using real-time Google search, and will get the results back and print it on your screen. Here we can see what stocks of mine had a positive or negative momentum in the last month and the potential reasons behind this positive or negative momentum. Okay, so to get this data, I can click on Intelligent Query Momentum Analysis. Okay, so now basically the software is fetching the historical data and generates the analysis. So this would be based on the last month performance of my stocks. Okay, so the top performers or stocks with positive momentum in the last month are Novo Nordisk, Louis Vuitton, Google, and Aritzia. Novo Nordisk was up 21% in the last month, and the reason is continuous success of weight loss drugs, Wegovy and Ozempic, recent FDA approvals for the new use of these medication, and positive analyst sentiment contribute to stock upward momentum. Okay, so basically I will talk about this news further in the video. Then we have Louis Vuitton, which is up 7.9% last month. Google is up 7.39%, and Aritzia 6.7%. It also shows you the stocks that had negative momentum and were down in the last month and the reason and potential reasons for this underperformance. It also shows you the market context, overall market sentiment. But yeah, so this is a very nice tool that I personally use to see what is the recent news regarding the stock and why the stocks moved up or down in the last month. Okay. If you want to have early access to this suite of software, which will be officially released between end of September and early October, you can head to yaraiq.com, enter your name and email address, and submit the initial interest form. Okay, let's go over the changes in the portfolio and exciting news regarding my stocks. Let's first look at my personal RRSP accounts at Wealthsimple, where I only have US-based stocks. Here I own 3 stocks: Google, Amazon, and Novo Nordisk. Let's talk about Novo Nordisk stock first. In the last 4 weeks, I added significantly to Novo Nordisk in this account. I had 120 shares and I added extra 70 shares to this position, and now I own 190 shares of Novo Nordisk in this portfolio. Since then, this stock has been on a significant run in the last 2 weeks, and for good reasons. Novo Nordisk stock price was obliterated due to a combination of factors, including a disappointing clinical trial for their new drug, CagriSema, and a warning that sales of its major drugs, Ozempic and Wegovy, would not be as strong as previously forecasted. The company also faced intense competition from Eli Lilly and the rise of cheaper, unbranded compounded version of its drugs. After all this bad news, the stock had an initial positive momentum after a couple of months due to weakness in trial results of Eli Lilly competitor drugs. The trial showed that Novo Nordisk Wegovy had better weight loss results compared to Eli Lilly oral GLP-1 drug. In phase 3 trial, Eli Lilly oral GLP-1 led to an average weight loss of almost 12.4% after 72 weeks. Whereas Novo Nordisk oral semaglutide showed its 13.6% weight loss. So the Novo Nordisk drug has a better performance, and this was caused basically stock to have an initial jump, which caused analysts to turn their heads back to Novo Nordisk for more competition in the weight loss. The other news is that Novo Nordisk oral GLP-1 pills will probably come out sometime in 2025, which is at least 6 months sooner than Eli Lilly oral weight loss pill, which is yet another catalyst that can boost Novo Nordisk stock price in the future. Then the stock had another positive momentum due to recent FDA approval for using Wegovy for the treatment of MASH, which is a progressive liver disease. This will also help Novo Nordisk to increase the sales of Wegovy in international markets and the United States. The stock is on a positive news and momentum streak, and it went from $45 per share to now $57 per share in just a span of 2 weeks. I'm going to hold my Novo Nordisk shares strong as I believe the stock is still massively undervalued here. Okay, after Novo Nordisk, let's discuss Google stock and some big tech news. I still own 100 shares of Google here. The last time I bought Google was when the stock was trading close to $160 per share. And as you can see, the stock is at a new all-time high share price right now. But what happened with Google? Well, the market rally on Friday definitely helped, but there was a major positive news for Google recently. Reports have emerged that Meta plans to invest $10 billion in Google Cloud. This was a massive commitment and signals a significant deepening of partnership between these two tech giants. This investment will reportedly support Meta AI infrastructure and its ambitious metaverse projects. This deal again highlights the increasing interdependence within the tech industry. Even competitors can find some strategic advantages in collaboration for specific projects. And for me personally, this is a major win-win situation, as I own both Meta and Google as largest positions. It will be interesting to see how this partnership evolves and the impact it has on both companies and the broader tech landscape in future. But for now, I'm happy owning Google as my largest position in the portfolio, and I still believe Google is slightly undervalued here. We are still waiting for the final judge decision on Google Chrome and the proposed remedies by Department of Justice. I think any decision other than forcing Google to sell Chrome will cause the stock to jump a couple of percentage points after the ruling. In this portfolio, as you can see, I sold 6 shares of Amazon to fund my Novo Nordisk buys, but I bought back similar number of shares of Amazon in other portfolio. So the number of Amazon shares across our combined portfolio remained the same. But in this portfolio, now I only own 30 shares of Amazon. Okay, from my Wealthsimple RRSP, let's change the gear and move to my TFSA account, which consists of only Canadian stocks. Here I own 5 stocks: Alimentation Couche-Tard, Brookfield Corporation, Constellation Software, EQBank, and Intact Financial. I bought 2 more shares of Constellation Software in the last 4 weeks when we had the widespread sell-off of software-related stocks. Now I have 5 shares of Constellation Software as one of my largest stock holdings in this portfolio. I believe Constellation Software share price will eventually goes back to 5,000 Canadian dollar. So this was a great opportunity for me to buy more shares of this extremely high quality business. I also bought another 20 shares of Intact Financial during the recent sell-off of the stock, and now I own 42 shares of Intact Financial in this portfolio. I pretty much maxed out my TFSA room, so I'm not able to really contribute more money to this portfolio during the year, but I'm happy with the overall positions and their sizing here. Okay, the last but not least, let's discuss Brookfield Corporation here and some interesting portfolio moves by a well-known investor, Josh Tarasoff. For those of you unfamiliar with him, Tarasoff is a highly respected value investor with a market-beating track record. He's a long-term investor of Brookfield Corporation, and recent filings show that his fund basically has sold 100% of its position in Brookfield Corporation and simultaneously initiated a new position in Brookfield Asset Management, or BAM. This is a significant shift. Tarasoff used to own BAM in the past, and he sold 100% of BAM and put all that money into Brookfield Corporation. This was the time that I did a similar move. After the spin-off of Brookfield Asset Management, I actually immediately sold all of my BAM shares and put all of that into BN, as I believe BN is much more undervalued and has a more diverse business model and can have better upside potential. Now Tarasoff did another major trade by selling out of Brookfield Corporation and buying back the BAM. Tarasoff hasn't publicly explained in detail why he traded BN for BAM, and while we can only speculate on the exact reasons, these are a few potential drivers for such a decision. So Brookfield Corporation, or BN, is the large asset-heavy parent company owning substantial real estate, infrastructure, and renewable assets, and an insurance business. Investors in BN basically get exposure to its operational businesses plus asset-light subsidiaries like BAM. BAM, in contrast to BN, is a more pure-play asset manager, especially the fee-generating assets. It earns management fees on Brookfield Corporation's and its affiliate assets. To me, as someone who studied Josh Tarasoff in the past, I can think of some reasons here. Maybe Tarasoff is trying to downgrade exposure to asset-heavy operational risk, like real estate and energy, and adding exposure to recurring fee-based income via BAM. Or maybe he is just trying to better aligning his portfolio with companies he sees as self-driving, those generating a steady compounding without complex asset mix. This is a theme that he's spoken about in his investing philosophy. Or maybe this is just a short-term trade as Tarasoff sees better short-term potential with BAM, and he might switch it back to Brookfield Corporation again. Anyway, if BAM performs well, Brookfield Corporation will also benefit from BAM's success, as Brookfield Corporation owns 73% of Brookfield Asset Management. So even if you own Brookfield Corporation, you still have a major exposure to asset management business and the growth in their fee-based business income. I'm not 100% sure what Tarasoff's justification is for this trade, but for me personally, I will hold all of my Brookfield Corporation shares for the stock split, and potentially I'm looking to buy even more shares after the split in the new year when I have more TFSA room to contribute to this account. What are your thoughts on these new developments? Are you invested in any of these companies? Let me know in the comment section below. Thank you for watching, and I hope to see you guys in the next video. Farewell.